that is option trading. So we all want to make investments, and as the word suggests, investments are made because they're expected to give the profits in the future. And when we make these investments, then there are various places, various options of making the investment. Now, these options or the places where the investment can be made can be real estate, can be gold, can be debt market, and one of the most important constituent of this investment market are the equity shares. That is, you tend to buy ownership in a particular company, and such investment can be done either through the primary market, that is, when any listed company or any company which is traded on a recognized stock exchange gives its share primarily directly to the public, and it can be secondary market. The primary market is also known as the IPO, initial public offering, and secondary market is the trading at the recognized stock exchange of the shares which have already been issued. So they are the primary issue, and they are the trading of the shares already issued. So when we do such trading of the shares in the secondary market, so what it implies that you can either buy the physical shares, that is, if I want to buy an investment or if I want to buy some ownership in Reliance Industries, and if the share price of one Reliance Industries share is say 2000 and I want to buy 100 shares, then I can invest rupees 2 lakhs in the 100 shares of Reliance Industries. And if I have a time horizon of 2 years and I expect that this price of 2000 in 2 years, because of the huge profitability increase and growth of the Reliance Industries, may go up to 2200 rupees, then I expect that I will be able to sell my 2 lakh investment for rupees 2 lakh 20,000, and I will be able to get a return of say 10%. And the other way is that I, instead of investing in physical shares, I can opt for derivatives. So these derivatives are primarily of three kinds, that is the futures, that is the forwards, and thirdly the topic of our discussion today, that is the option. So options are basically financial derivatives, and financial derivatives are something which derive their value from an underlying asset. So if we say equity options, then equity is the asset class which gives a value to its options. Therefore, option is a derivative of equity if we are trading in equity options. So what actually the option is, that if I go by the definition of the book, then we will analyze that options are the contracts. So the first important word is that the options are the contracts which provide the holder. So the word will be holder. And what it does, it provides holder the right. Now what is the right that we will discuss? To either sell or to buy. यानी कि उसके पास हक है खरीदने का या बेचने का. A specified quantity, a fixed quantity of an underlying asset. And the underlying asset here, as we have said, is the equity of an underlying asset, that is the equity which is the underlying asset. So if I trade in gold options, then the underlying asset will be the physical gold. Okay, and it has to be at a fixed price, and it has to be at the expiry of a specified date. So before we move forward, that when we say at the expiry of the specified date, then it can be only on the expiry date or before or on the expiry date. तो अगर एक्सपायरी डेट 20th मई है, तो या तो 20th मई को ही सेटल होगा या 20th मई से पहले कभी भी सेटल हो जाएगा। तो अगर आपके पास ऑप्शंस हैं कि आप उस डेट पे सेटल करिए या उससे पहले सेटल करिए, देन वी यूज द वर्ड अमेरिकन ऑप्शन। और अगर वो सिर्फ उसी डेट पे सेटल होगा, देन वी यूज द वर्ड यूरोपियन ऑप्शन। So in India, we have primarily two kinds of recognized stock exchange, that is the National Stock Exchange NSE and the Bombay Stock Exchange BSE. And these two exchanges, under the guidelines of the SEBI, Securities Exchange Board of India, only permit European option trading for equity. So we can only opt for European options. So it has to be settled on the expiry date and the quantity is fixed. So the quantity has been fixed, which we use the word lot size, and it has been specific for specific equity. तो अगर वो रिलायंस का ऑप्शन है तो उसके लिए कुछ और साइज है, और अगर वो टीसीएस या किसी इन्फोसिस की कंपनी का शेयर का है तो उसका लॉट साइज कुछ और है। एंड दिस हैज आल्सो बीन फिक्स्ड by the NSE and the BSE under the aegis of the SEBI. What is the underlying asset that we have discussed? So the fixed quantity has been discussed and it has to be the fixed price. This fixed price is also known as the strike price. That is, when we said that it is a contract, so there are always two parties because contract will always be created when there are two parties. So it is basically a kind of contract between two parties which assures each other for something. So these two parties are known as option writer and option holder. So if I now come to understand these words in total, and for that I am taking an example, that if we say that Mr. X and Mr. Y, Mr. X wants to buy, let's say, a lot size which is fixed for a particular share, let's say is 250 shares, and the share price of such lot size is say rupees 2000. So if Mr. X wants to buy 250 shares of a particular company of price 2 lakhs, then he will need to invest rupees 5 lakhs for the same. ठीक है, 2000 के अगर उसे 250 शेयर खरीदने हैं तो उसको 5 लाख रुपए इन्वेस्ट करने पड़ेंगे। एंड ही presumes that the price of the share will go up. उसको लगता है कि ये 2000 का शेयर अगर फ्यूचर में 2100 रुपये हो गया तो जो उसकी 5 लाख रुपए की इन्वेस्टमेंट है वो 5,25,000 रुपये हो जाएगी और उसको 25,000 रुपये का प्रॉफिट हो जाएगा। ठीक है, बट हो क्या रहा है कि ये 5 लाख रुपए इन्वेस्ट करना, इतनी लिक्विडिटी, इतने फंड सबके पास नहीं होते। तो बिकॉज ही बिलीव्स दैट द प्राइस ऑफ द शेयर विल गो अप, so there is another way of trading, that if he believes that this 2100 share can be available at a price lower than 2100, say 2050, then he will be at profit. Now there is another person in the market, Mr. Y, who believes that in this period, let's say this estimation was for 1 month, and Mr. Y believes that in this 1 month period, X estimation that the price of the 2000 share will go up to 2100 is not true, and the price of the share will only be up to 2020. So because Y is of the opinion that the price of 2000 share in this 1 month period will not be more than 2020, and X is estimating that the price will be around 2100 and for sure above 2050, then this 2050 price which Mr. X is ready to take risk upon is known as a strike price, because it will be subject to the condition that Mr. X and Y are both agreeing on the term that if, or I should say, whatever is the price after this 1 month period. So if they are entering today and the date after 1 month is, let's say, 29th May 2022. So this date on which they want to settle is the strike date or the expiry date. So here Mr. Y is believing that the share which Mr. X is ready to buy at a price of 2050 will be available only at a price of 2020. So he can always purchase the share from the market at 2020 and will sell to Mr. X at 2050 and will generate a profit of rupees 30. And Mr. X is believing that the price of the share will be around 2100 and I will get it for 2050. So I will get the share from Mr. Y for 2050 and sell it in the market for 2100 and I will get a profit of 50. So he is anticipating certain profits because he perceives the price to be higher, and he is anticipating a profit of rupees 30 because he is anticipating the price to be lower what the strike price has been agreed upon. So if these two agrees into a contract, then if they are forced to carry this transaction physically, then it may be termed as a future. But in the case of option, Mr. X has the option to buy the price at 2050 and he will buy the price as 2050 only if the actual price in the market is more than 2050. So on the expiry date, if the actual price is more than the strike price, only then Mr. X will buy. Otherwise, if the price in the market is around 2050 or less than 2050, then Mr. X will not opt because his perception or his anticipations has not been corrected और जो उसने anticipate किया था वो हुआ नहीं. So अगर ये actual price जो है वो कम है या बराबर है स्ट्राइक प्राइस से तो मिस्टर एक्स ये शेयर नहीं खरीदेगा. So what is happening here that X is getting an option to buy or not to buy. वो चाहे तो खरीद ले और चाहे तो ना खरीदे. So when someone gets an option to buy or not to buy, then this buy option is known as call option. And this call option is enforceable because Y is under a legal obligation to fulfill the option of the X. मतलब X की अगर चाहेगा खरीदना है तो X को Y को देना पड़ेगा और अगर X ना चाहे तो Y फ्री हो जाएगा और Y is under an obligation to satisfy the option needs of the X. So in this case, because X has purchased or X is holding this option, so he is known as the holder option. And because Mr. Y has provided the option, then he is known as a holder writer. So if I summarize that a holder, option holder and option writer, these are the two parties which has agreed for a particular strike price on a particular expiry date where it's up to the option holder that whether he exercises his rights or does not exercise his right. उसकी choice है कि वो option इस्तेमाल करे option इस्तेमाल ना करे. और इस special privilege को लेने के लिए he has to pay certain price to the option writer because as we say that every contract will be completed only if there is a mutual consent which is there and also there is a mutual consideration. So what option holder is getting is the right or the option to buy. So this right or the option to buy is the consideration given by the option writer to the option holder and In consideration to such right, some amount is given which is known as the premium, or we can say the word option premium. Option premium. So this option premium is the consideration received by the option writer. So this option premium gets, so sorry, this option writer gets option premium, which is his maximum income. So every option writer can generate a maximum income of option premium, and this is the maximum loss possible to option holder. But this option holder, in lieu of this maximum limit on the loss, has unlimited potential, has unlimited potential टू जनरेट प्रॉफिट. इसके पास कितना प्रॉफिट आएगा ये कोई डिसाइड नहीं कर सकता है, क्योंकि अगर ये स्ट्राइक का कॉन्ट्रैक्ट हुआ 2050 का और शेयर एक्चुअली में 2040 रह गया, 2020 रह गया, या 2050 तक भी रह गया, तो इसका मतलब ऑप्शन नॉट एक्सरसाइज्ड. और जब ऑप्शन एक्सरसाइज नहीं हुआ तो इसका ऑप्शन प्रीमियम बेकार हो गया, ऑप्शन प्रीमियम वेस्टेड. और ऑप्शन राइटर के लिए जो ऑप्शन प्रीमियम था वो उसकी इनकम बन गई, क्योंकि वो उसने अर्न कर लिया. लेकिन अगर प्राइस 2060 हो गया, लेट्स से फॉर एग्जांपल यहाँ जो प्रीमियम दिया गया वो 50 रुपीज़ था ऑन अ लॉट ऑफ 250 शेयर्स. The maximum possible loss for the option holder is 50 into 250, that is 12,500. And the maximum profit that can be earned by him is 50 into 250, that is 12,500. But अगर ये प्राइस एक्चुअल में 2060 हो गया तो उस केस में जो ऑप्शन है दैट विल बी एक्सरसाइज्ड, और उस केस में 50 रुपए के प्रीमियम में से 10 रुपए उसने कमा लिए, बिकॉज ही इज गेटिंग a thing of 2060 for only rupees 2050. तो उसे वहाँ पर 10 रुपए का प्रॉफिट हुआ. तो जो उसने प्राइस पे किया 50 रुपए, 10 रुपए का प्रॉफिट माइनस हुआ, और 40 इज द मैक्सिमम लॉस. और इसके 50 रुपए के प्रॉफिट में से 10 रुपए चले गए तो इसके 40 रुपए का लॉस हो गया. सिमिलरली अगर ये प्राइस 2080 होता तो 50 के प्रॉफिट में से 30 चले गए तो इसका जो मैक्सिमम लॉस है वो 20 है, और इसके 50 के प्रॉफिट में से 30 रुपए चले गए तो इसका 20 रुपए मैक्सिमम प्रॉफिट है. और अगर ये प्राइस 2100 हो गया तो 50 का प्रॉफिट 50 का लॉस, तो ये नील पे निकल गया, और इसके 50 के प्रॉफिट से 50 का लॉस हो गया तो ये नील पे चला गया. तो अगर प्राइस 2100 पे सेटल हो गया तो दोनों पार्टी नो प्रॉफिट नो लॉस से हो जाएंगे. लेकिन अब जब प्राइस 2100 से ऊपर चलना शुरू होगा तो इसका जो प्रॉफिट है वो अब, यानी कि अब जो उसका प्रॉफिट है, ये इनको मैं ठीक से ऐसे लिख देता हूँ कि उसने 50 रुपये दिए 10 रुपये कमाए, 50 रुपये दिए 30 रुपये कमाए, 50 रुपये दिए 50 रुपये कमाए. यहाँ 50 रुपये कमाए 10 रुपये गए, 50 रुपये कमाए 30 रुपये गए, 50 रुपये कमाए 50 रुपये गए. अब 50 रुपये प्रीमियम दिए तो 70 रुपये आए, तो प्रॉफिट 20 रुपये आ रहा है. और इसके आए 50 थे और 70 जा सकते हैं, तो लॉस. तो यहाँ से अब जितना जितना प्राइस बढ़ता जाएगा, यानी कि 2100 पे ब्रेक इवन है, तो स्ट्राइक प्राइस was 2050, premium was 50, so it gives rise to 2100. So at 2100 price, both the parties will be at no profit loss. And if the price is more than 2100, then option holder is positive and option writer will be negative. And if the price is less than 2100, then option writer will be positive and option holder will be negative. But इसके पॉजिटिव पर मैक्सिमम लिमिट है, एंड दैट मैक्सिमम लिमिट इज इक्वल टू द प्रीमियम, और इसके लॉस पर मैक्सिमम लिमिट है, एंड दैट मैक्सिमम लिमिट इज इक्वल टू प्रीमियम. सो ऑप्शन trade to buy or not to buy a particular equity share is what you call the call option, is what to call the call option. And if this option is not to buy but to sell, that is, you have the option that if you want then you can sell, and if you don't want then you cannot sell, or you don't want to sell, it's your choice, then we use the word put option, and that we will discuss in our next session. But before I close this session, there is one thing that is to be noticed, that here the expiry was, or the settlement was to be made only on the expiry date. So the price or the strike price has to be compared. That is, the actual price on the expiry date is to be compared with the strike price, and that will decide whether there is a profit or loss for the option writer or not. But if they could have been the American option, then they could have settled it any time before the expiry date. So if the option holder has such kind of American options, and in any of for such expiry date, his price is more than 2050 or his price is more than 2100, then he can book the profits and exit. And that increases the profitability options for the option holder and hugely increases the loss options for the option writer. And that's, so it does not create a level playing ground for the option writer and the option holder. That is why in Indian equity market we have only been allowed to trade in European option, where the actual liability of the option writer will be settled only on the date of the expiry. And when it's come to the settlement, then this settlement can be done either by the actual physical delivery. That is, कि अगर इस एग्जाम्पल में एक्स ने कहा था कि मुझे 2050 शेयर 2050 की प्राइस पे शेयर चाहिए, और मार्केट में रेट अगर 2100 है, तो ये ऑप्शन राइटर की जिम्मेदारी है कि वो 250 शेयर मार्केट से खरीदे और उसको 250 शेयर सबमिट करे. तो इस केस में ऑप्शन राइटर को 250 शेयर्स खरीदने पड़ेंगे और ऑप्शन बायर को 250 शेयर खरीदने पड़ेंगे, यानी कि दोनों के पास इतनी लिक्विडिटी होनी चाहिए. बट ultimately the overall objective was to get the profits, because if they wanted to buy the actual delivery of the share, then they could have opted for the physical delivery of the shares through the delivery market or the cash market. Therefore, in the Indian equity and or the Indian option market, we are not going for the actual physical delivery, and we settle it only in the form of the cash. So we use the word that it will be a cash settlement. It means कि जो ऑप्शन अनयूज्ड रहा एक्सपायरी डेट तक, उस एक्सपायरी डेट पर जो भी प्राइस डिफरेंस है उस पे सेटल हो जाएगा. यानी कि अगर ये जो स्ट्राइक प्राइस आया और जो ये एक्चुअल प्राइस है, इनके डिफरेंस से डिसाइड हो जाता है कि ऑप्शन आपने इन्फोर्स करना है या ऑप्शन आपने इन्फोर्स नहीं करना है. मींस अगर स्ट्राइक प्राइस 2050 का था और एक्चुअल प्राइस 2040 है, then it denotes itself that the option will not be exercised, and whatever the premium is being paid by the option holder is the loss to him, and the premium generated to the option writer becomes his income. And we also need to underline that this option, once purchased, it negotiable. For example, this option, if given by Mr. Y to Mr. X, then Mr. X can sell it to Mr. Z. So it can be sold on multiple times depending upon the premium So as the price in the market fluctuates, as the price in the secondary market fluctuates, the value of the underlying asset is being changing. I'm saying if the price of the equity is changing, that is the price of the underlying asset is changing. So it changes the risk perception, and therefore the premium on such call option may change. And therefore, a person who has purchased the option once, if he believes that the premium has increased, then he can sell the option to someone else at a higher premium and book his profit. So a person can either go for the profit booking on the date of the expiry, or he can sell it before any of such dates to any other person to sell at higher premium and book the profits which are inherent in this case. So I hope we should be able to understand that call option provides not just an option to buy or not to buy, but also it is a tool where a huge quantity of the shares for which a person may not have liquidity can be traded with the conviction of the buyer and the seller, that is the writer and the holder, on their diverse perceptions that whether the price of the share is going to increase or the decrease. But a person will buy a call option only if he believes that the price of the particular equity is going to increase in the future. And just on a closing note, that when we buy these options, whether they are call or put, they can either be on a particular specific equity share, as we took the example where we bought the equity option of Reliance Industries, or they can be indexed funds, or they can be index options. As you know, that on NSE, a cluster of top 50 blue chip companies is known as Nifty. On Bombay Stock Exchange, the cluster of top 30 companies denotes Sensex. Similarly, all the top 12 bank shares on the National Stock Exchange denotes Bank Nifty. So there are various index options which can be traded on the belief that if the market is going up, then a person can opt for the call option or the put option. So if I believe that the cluster of the value of the 50 shares at NSE, that the Nifty is going to up, then I can buy call option, and vice versa can be the case. So if I believe that the Nifty will not increase, then either I will buy the put option or I will go for writing the call option, that we will discuss in the next session. Then we will take up the put option. On this note, we are closing this session. Thank you. Goodbye.